Everyone, in today's video I'm going to go through my thinking on agronomics. If you want to see my original theses, links up there for one of the earlier videos I've did. I'm glad I did this exercise because I've learned quite a few things. One is they are undervalued right now, but depending on your kind of risk level and where you think all the companies will sell, we'll see by how much that actually is. I think my overall thesis still stands on how I feel about investing in VCs. This is going to be a bit more of a long form look through some of the financials that I've been digging through. Again, I think they're good investors. I don't like investing in VCs as a retail investor. I think a lot of these companies are really good, and there could be potential for some of them to do better than I am mentioning. We need to look at the individual companies and less at agronomics. Let's get into this video. In this document, which you will be able to access as a Patreon supporter, I have put together all of the financial reports for agronomics from 2018 to 2022. Again, I'm not focusing on, they have about $500,000 invested in legacy investments in some of their biotech companies, and I'm just really, for my purposes, assuming that that's not going to move the needle all that much. And then my second sheet, I've broken down all of the companies, again, what their deal types are, company stage. I've also put in the valuation, what the latest deal type, the latest deal amount was, the total raised, how many employees when it was founded. And these things can just help us kind of gauge where the company is. And then I've looked at every single investment that Agronomics has done. So investment type, the amount, what that is in pounds, and then the date of that, and how many shares that Agronomics ends up owning, including the percentage ownership of that company. And so that gets important when we get into valuations. I've just put another tab just to illustrate, because I want to illustrate this point, and this is really how I'm calculating the valuations here. So we have these companies, we have these deal types. This is the latest round of their valuation based on the latest fundraising round they did, and this is the total amount of funding. So for example, with Upside Foods, who we've covered in a number of videos, they're currently valued at over $1 billion, and they're on their Series C round, and they raised about $600 million to date. And so you can see how that starts to play across both the different funding rounds, but also you can start to get a little bit of an idea just based on the amount that has actually been raised and the deal type, kind of what their valuation might be. What we really want to see is the cap table, and which is the funding history. And so here's an example for a perfect day. We can see all of the different funding rounds they did, how much they were raised over that time, what the share price was for each of those funding rounds, and then what the valuation of the company essentially was. And really, these are the numbers. So when we want to calculate our valuation, we want to see, okay, the company is valued at 1.73 billion. Then we can go ahead and look at the number of shares or the percentage of the company that Agronomics owns and calculate the value of the company that Agronomics has. So that's how we do that. Now, it's hard to get these tables for most of the companies, and so I found as many as I can, and I've put that in the valuation model, which you'll be able to access. So here, for example, we have Blue Nalu was valued at 75 million back in 2020. And so based on these numbers, I've then gone and calculated a valuation for that. And if you want to get access to this data, this can cost tens of thousands of dollars in some cases for some databases like PitchBook, which I've gone on in other videos before. That's how we're basically getting our numbers. Now on to valuation. I have three parts here. One is some scenarios I put together, and the other one is what I actually think the company is worth. So first I'm just comparing what Google Finance says with what the Agronomics reports say. So the Agronomics report has invested a total of 92 million in companies, and they have stated that they have just under 1 billion shares outstanding. So if you do that math, then we have 9 cents a share. Well, that's about where we're trading today. Remember, this is in sterling, and so to get pounds, you need to divide this number by 100. So this is exactly about where we're trading today. And when we look at the Google market cap, it's saying it's 96 million, and this is data that I'm pulling directly from Google. So we're just taking the price of the Agronomics shares on the London Stock Exchange, dividing that by 100 to get that a share price there of 10 cents. So I just wanted to compare that, and that's interesting because we can see that the current valuation is actually low because the share price seems to be trading right now at this moment on the total amount invested. But if we look at the total amount raised, Agronomics, if we looked at all the reports, they've raised over 180 million. And so if we would take that and just divide that by the number of shares they have, you get a share price of almost 20 cents. So that's almost double where we are today. Agronomics has raised this 180 million. So if we're looking at those people who've actually put money in, where they've raised from, they're probably looking at a 2 or 3x return. And so in order to get that, Agronomics would need to increase their value of their assets to 360 million for a 2x return or 550 million for a 3x return. And that would get you 36 cents a share and 55 cents a share respectively. And this is assuming all 25 of those companies actually are sold. So if Agronomics could sell each company, in order to get the 3x return, they would need to have basically a $21 million return, which means all 25 companies, in order to get this 3x return, would have to sell for just under 90 million pounds. So these are assuming we don't have any losses. So that's a pretty tall order to get a 3x return. I don't think all the companies are going to succeed, right? We just got some news earlier this year saying one of their portfolio companies, Shiok Meats, lost 50% of their team. Shiok Meats in Singapore is focused on cell-based crustacean products. They lost half their team in the past 6 months as of May of this year. This had resulted from 2 rounds of layoffs as well as employees leaving the firm over doubts on the company's future. The CEO wrote in a LinkedIn post that its troubles came after the funding market turned sour amid a looming recession. The CEO also shared that the company hired the wrong people, with the company struggling with team culture and structure, especially through the COVID-19 pandemic. So they realized that they cannot commercialize or scale up crustaceans as fast as they thought they would. They highlighted the difficulty in research and development for seafood cellular agriculture as a major hindrance for the firm. So this doesn't look great for the company. They're still around, but I just want to highlight that companies can go away. They can go bankrupt pretty easily. When I do my scenarios, I'm saying, well, we're going to assume that Agronomics has now 26 companies that they're invested in. One of them's bankrupt. So out of the 25 companies that left, I'm going to say 20 of those will still be around, and they will exit, and they won't go bankrupt. Shiok Meats, I'm not so sure about. So I've modeled out to get a 3x exit, we need a billion exit where Agronomics owns 25% of the company, and we need 2 companies to do that exit to give us 500 million. We also need 100 million exit at 25% ownership. So Agronomics needs to own 25% of one of the companies. That's 25 million. So Agronomics needs to own 25% of 3 of the companies. 2 of those have to have $1 billion exit, and one of them has to have $1 million exit. Then they need to own 3 companies. They need to own 15% of 3 companies that have $100 million exit, and 3% of 14 companies that have a $15 million exit. And that gets us just over our 3x return mark, which would give us 60 cents a share. $1 billion exit is already quite large. You need that for two companies, and then you need another company. So, and all these companies you have to own 25% of, which is quite a significant amount. Now, Agronomics has only invested 92 million out of their 180 million, but some of that money has gone to pay Jim, and some of the companies have gone bankrupt, and some of them may go bankrupt. So we may never get a full 180 million raised actually invested, so we're going to have to take some off of that. 2x would be a lot easier. Here's some numbers for getting a 2x exit, and if we are able to do that, so that really leaves us with a return of, on average, 350 million, and so that gives us a share price in the 30-cent range. Interestingly, the highest that we've ever traded has been 35 cents. In terms of my thinking, if you look at all-time highs, we could get back there. I think that's feasible. I don't think we're going to go any higher than that. And then there's some other possibilities, including ones that don't leave us much growth. Maybe we get close to double on the share price of where we are today, but we might not go much higher than that. So from my valuation, again, if you want to see everything, it's in this tab, Agronomics Investments, where I've laid out everything, and I've laid out which companies I think might get to the $1 billion mark, and if you look at the percentage of ownership, you can do your math there. But in my kind of optimistic case, assuming that 20 of the companies do stay around, assuming we can get a 25% ownership in one company that has a $1 billion exit. If we don't, we're looking at around 16 cents a share. If we do, we could potentially get up to 41 cents a share. So I think this would probably be my bull case, where Liberation Labs would exit for $1 billion. Every company in Geltor would also exit, both for $1 billion, and Agronomics owns about 1.5% of each company. Vitro Labs would exit for around $200 million, and Agronomics would own about 10% of the company. Then we'd have another 4 companies that Agronomics would own 15% of. They would have to do $100 million exit. 3 companies which they own 10% of do $100 million exit, and 3 companies which they own 5% of doing $100 million exit, and then the last 6 which they would own 2% of do a $15 million exit. Again, if you look at this tab, which is accessible to Patreon supporters, you'll be able to kind of see where I'm getting my numbers and what those percentage of ownerships are. So I think this is my bull case. Again, that's highly dependent on Liberation Labs really getting that $1 billion exit, or it could be someone else. But right now, Agronomics doesn't own a large percentage of too many companies. We only have 2 or 3 companies that fit that bill. We're going to have to see how that goes. But again, if we take out that massive exit, we're left with not that big of a gain from where we are today. We're undervalued at this point at 9 cents, but we're not necessarily undervalued by that much. I'm Chris, and we'll catch you in the next video. Thanks again for watching.